Hello, all. I'm Kerry Lutz, and with us today are Bill Powers, John Fennick, CEO and founder of Copper Bank, Gianni Kovacevic, and consulting geologist Mark Fow. And this is a production of Mining Stock Educators. For those of you familiar with us, you know that we are always on the lookout for resource companies that are undervalued. And with copper today hitting 378 with more upside on the way, you can see the potential of massive gains. And clearly, the company we'll be talking about today, Copper Bank, falls into this category. And Gianni Kovacevic, talked with him a number of times before. Gianni, you are truly a visionary and forward thinker. Your views on the electrification transformation currently taking place around the world and copper's vital role in it is profound. And I've been looking forward to this webcast as much as to see Gianni share his wisdom with you, as for myself to see what Gianni has to say today. And one of his quotes, probably my favorite, and I am a quote collector, really sticks in my mind. He says, "I buy assets from pessimists and sell them to optimists." And this sums up his approach to starting and growing Copper Bank and why you need to take a close look at it. Make sure you use the webcast control panel to ask any questions you may have. We will do our best to get all of them without exceeding our time constraints. Johnny is outside the country right now in a place with not the best internet service. Hopefully we won't have any interruptions, but we'll deal with them as they come. So Gianni, thanks for coming, and the stage is all yours.
Thanks a lot, guys. And I really enjoyed my collaboration with Bill Powers. And I think what we were, our first interview was really about a little bit of the romance of why I like the theme and this commodity and where we're going. We have been telling the market that our team is going to get active this year. And Mark Fow, who's a consulting geologist to Copper Bank, he lives in Montana, but he was on the project last week. It's his second visit there, and he's very familiar with the big copper porphyries of the world. So we're going to start with a little bit of the macro side of things, why this business model is very themic, and I believe is one of the great opportunities of this decade. This theme of electrification and in speculating and investing in the enablers of it, because there is a gigantic arbitrage of ignorance on what actually makes this possible. So if you can dig down into the details, I think people will be very happy with what they see. First of all, mining is ruinously expensive. And that is exactly correct. What Kerry said, I bought real property, projects that have historical mineral resources in copper in the United States, and I bought them at the depths of the bear market, when you could only find maybe 2 or 3 other periods in my lifetime, in the past 40 or 50 years, where the mood was just so negative. We bought, and I'm going to share with you why we think there's an outsized opportunity for all of our supporters and stakeholders in Copper Bank. Everything I say here, there are forward-looking statements, and this statement should be used in the context of everything that we discuss here today. So we have 2 different development projects. We have Contact Copper, which is located in the state of Nevada in Elko County, and we have the Copper Creek project, which is in Pinal County in the world famous copper corridor of Arizona. And we're looking to advance both those projects. We own everything 100%. We have no debt, and there is a significant private property, real property, patented mining claims that we have with both projects, surrounded by some other state and or BLM mining claims. And then we have our royalty company as we move the ball down the field with the projects, there is a royalty opportunity at both Contact and Copper Creek. We're not going to leave that behind. We think that's a really strong third business for long-term shareholder value, for those guys that want to monitor how we move the projects forward. And so we look at us as a multi-asset company. We're not relying on any one initiative. It's, as the website says, it's exploration, it's development, and it's also this royalty opportunity. The stock is actually, you can be a technical chartist or you can look at fundamentals, but huge volume. We've traded now about 13 million shares at around 34, 35 cents, all in the past sort of 34, 35 days. That is an incredible endorsement to where copper is going, and the company, sort of some of the hard work that we've done over the last couple of years with the team is now paying dividends. There are many people, many houses. The stock is consolidated. We announced the financing a couple of weeks ago, and I did put a note out today that we're no longer taking subscriptions. It's full at this point, and we're looking to close that early next week. And that was done at 35 cents with no warrant. And more importantly, when the stock was 32 cents, I announced this financing. We knew that it would be supported because we as insiders were going to be the lead orders. And when it was announced, we have this track record of closing these financings, and sure enough, it traded at 36, 37 cents. So everyone's treated equally. There was no warrant attached to this, so people can still look at it at the open market. And if you look at the longer term chart here, we're still trading significantly below where we were even in 2017. And we were raising capital at 60 cents, 52 cents. And you could see now that we're about 35 cents Canadian, or about 28 cents US. But more importantly, what do you get? The market cap in US dollars, I think most of our supporters here would be following on the OTC, which trades at 28 US cents. The market cap is 24 million. There's a couple metrics here. If you look at the previous market cap high of everything that we acquired in the depths of the bear market, well, what were those companies trading for back in 2011, 2010, 2007? The answer is it would be well in excess of $3 a share. So it's not to say that happens again, but if we execute, we have positive trade wins in copper, and we're able to maybe have a little bit of success in the drill bit, that's an outcome. That's a plausible outcome for us to have when you have an ebullient or euphoric copper market. Could we see a market cap similar to what had already occurred? This is nothing that fantastical. You can actually look back on the charts of the companies, and I actually show those later on in the presentation. So we love this theme, and it's going to become very important. And I think you're going to see this on the front page of many global publications, above the fold, page 1. You can be investing in copper right now because it's still buried in the back, back in page 16, but it is coming to the front page of every media publication, because simply put, it is the enabler of electrical energy, and electrical energy is the Green New Deal. When you take emissions out of global energy, the way we create, transfer, and utilize it, it's electrification. And this theme, just to put it in context, there's a lot going on here. Don't be confused by it. I'm trying to show you one thing. The point is today, final energy usage, only 20% of that is electrification. And we are going, and you can use any forecast or any sort of guidance going in the next 30 years, but it goes to 50% becomes electrified in our world. This is actually going to happen probably faster because of all this COVID stimulus, the Green New Deals. There's many countries are talking about this. So rather than a 30-year investment, you're going to see a lot of this manifest itself in the next 15, 20 years. You don't have to like it. It's a bumper sticker issue maybe that you don't like or you don't care about. For me, I'm an investor, and I understand how much copper it took to install the electrical network of the world today from 1890 to 2020, and it's only 20% is electrification. The delta in that next 30%, I mean, the CapEx, you can't model it. It's so magnificent. It's going to be done together with copper and aluminum. And if they've actually already, some analysts have already looked at the CAGR growth rate. What will it require to have a middle of the road scenario for copper demand to enable some of this electrification? Now, I'm not talking about the crazy scenarios or the epic fail, but just middle of the road. It's going to be a CAGR growth rate in the demand of copper at about 6% per year. And if you look at the historical average from 1900 to all the way through the China super cycle, it was maybe 4%. It's significantly more than any of the best times we saw over the past 120 years. And net, the rule of 72, the demand for copper, which is currently a 25 million ton market, will go to about 40 million tons in the next 15 years. Where will this copper come from? Not going to talk too much about the basics, but electric cars take more copper, 400% more. When you're talking about offshore, onshore wind, it is a power of magnitude more copper in all of these things that enable electrification and the storage of electrical energy. Because that's now where we're going to start commingling the two of them together, which is AC meets DC, DC being the batteries for the backup power storage. And the numbers will be enhanced, but even today, even before all this begins, of all the copper that's produced in the world, 75% is fabricated into something to generate, transfer, or utilize electrical energy. This now goes yet further. Even more things are going to be fabricated into copper. Can we use aluminum, and where will aluminum be a substitute? The fact is, in the world's electrical networks, many things we only use aluminum because it's light, and many things we only use copper. And it is true, there are certain overlaps where we can use either or, what's cheaper. But as we actually look at this integration of alternating current with direct current, and more importantly, ultra high efficient products, you can't use aluminum for that. You're not going to have stupid energy inefficient generation, transfer, and utilization when you can use copper. And there is a price incentive, which is 3.5 to 1. And if you look at the second part of this, aluminum as substitution, don't talk about plumbing tubing. We have been substituting plastic since 40 years. We're not using as much copper in that industry, and that's always been the case. But when you're talking about big power systems, you simply cannot substitute the aluminum, or it's not as easy, or it's just the price incentive just simply is not there. The answer is we're going to use aluminum and copper, but there is no other thing. Copper is simply the only conductor for all of this electrical energy, and that really is something I cannot emphasize enough, and it cannot be underlined enough. Some people think that we'll be able to recycle a lot of copper. Not exactly true. We've always used scrap copper. We've never thrown away copper, not Julius Caesar, not Napoleon Bonaparte, and to this very day. The single best year that scrap copper provided to the market was in the China super cycle, where copper prices really took off. In the peak year, 24% of copper supply came from recycled copper. So is it plausible that we could have something today? It's about 17, 18. I could see that increasing. It's not going to save the day. We're talking about an extra 1 million tons a year on a 25 million ton a year market and growing, where it's going to be really hard, because when we recycle these products, they're typically remanufactured, and we're making something that actually requires more copper. Warren Buffett loves businesses that have these moats, and copper mining is actually a fantastic business because it has incredible built-in moats, more than one. And the first one is it's geologically scarce. The fact is, copper at commercial availability, it has always only occurred in a few places, and the future of copper will continue to be either at high elevation in the Andes, Chile, Peru, a little bit of perhaps Ecuador, going forward, or it's going to be in areas of much higher political risk. Or they're going to have to go, major mining companies that is, are going to have to go to areas that have established mining camps, that have all of this infrastructure basically in place. I'm talking about Arizona and Nevada and Australia, British Columbia, even Quebec, where, maybe there's some other things that aren't so, attractive to the deposit, but you save so much money with the workforce and all the infrastructure that's already there. And they have a choice to make, because when you look at it, and this is a very special list, because what you're looking at here in the pink box are the countries where the world's development projects are located. Let me be clear. These are the projects that are now financed and going through development to actually provide the world copper between now and the year 2027. Peru, Chile, areas that have a lot less political stability, and not a lot of it is in established mining camps. The second part to glean out of this graphic is the amount of capital that's going to be required. About $65 billion in today's dollars is the sort of estimated CapEx by these major mining companies, and it's going to yield about just over 3 million tons a year. Now remember, if copper is growing by 6% on a 25 million ton market, that's not going to cut it. Still, you're looking at a lot more capital to build these projects, and we are now going to start seeing some cost inflation. And the location. The copper geographically only occurs in certain places. So investors really have to start looking at a comparison between the oil industry and the copper industry. We know the demand is different because when you go away from fossil fuels and oil, you're using something that's more electric and is going to consume more copper. They're actually directly inverse. But the world's oil supply actually comes from over 4.5 million individual wells, from the biggest ones of Saudi Arabia to the little mom and pop in Alberta, Saskatchewan, or Texas. Where copper mining, actually about 20 mines give us 45% of primary supply. And if people thought we relied on Middle East oil, wait till they realize that 40% of primary copper supply comes from Peru and Chile. That is not on the front page of most global publications. These are the world's biggest oil reserves. I'm not trying to have you focus on that. I really want you to look at countries that simply do not have a petroleum endowment. I'm talking about Japan, China, a growing India, Germany, Italy, and all the other industrial superpowers of the world. They now, overwhelming pressure, pollution, global warming, Green New Deal, COVID stimulus, call it what you will. But the technological advancements that have occurred in those networks at least make it plausible that in the next 15 to 20 years, they can slowly consume less oil for transportation fuels, whereas we can use the oil supply for enhanced value products like plastics, petrochemicals, fertilizers, cement, and all the other things that are also, far more valuable than simply refining a barrel of oil into diesel, burning it, and repeating that process week in and week out. So the second moat that the copper mining industry possesses is it's technical. There has been a dearth of technical innovation and exploration, sort of the development of that industry. We know this, and we've looked at the lack of success in the past decades in comparing that to oil. Traditionally, you used to only get 8 or 10% out of oil out of a formation. This is the way they used to drill for oil, vertical. And then there was horizontal fracking, and then they got longer and longer fracks, more and more directions, where they're able to get a power of magnitude more oil out of a formation. So this really was a game changer. They reinvented the wheel. And this industry now has, as long as you have the right oil price, call it $60 or $70, this was a game changer. Copper mining has no such game changer. And when you see what happened to U.S. oil production, because they weren't quite able to go around the world, and there's a lot of formations it's not going to work in, but certainly we saw what happened. They tripled oil production in the United States in a decade. There has been no such doubling, and there will be no such doubling of copper production out of Peru or Chile. We need to understand that the grade of copper has fallen consistently, or to put it more bluntly, there's simply no copper in the rock. The concentration in a ton of copper, the future reserves is between 0.3 and 0.4%. Where's your innovation? We already recovered 92, 93% of the copper out of the rock. We had a lack of success, and it's not from lack of trying. So when you look at these are 20 projects or 19 projects that are not owned by a major. I think there's been a couple takeovers here, but basically the juniors, the future resources and reserves of the copper industry are conclusively below 0.4%. In fact, it's 0.3. And this is not from lack of trying. When we look at how much money we as an industry spent during the China super cycle, here's the graphic. The line is the dollars spent year by year. This is from Rio Tinto, right out of their presentation. The bars are the success. Where did we find a world-class or tier 2 or tier 3 deposit? We spent an ungodly amount of money looking for copper. We did not have a lot of success as an industry. So you cannot underline enough the importance of appreciating this graphic. I do not believe, like the past cycles, just because the copper price goes much higher this time, They already did that. They already scoured the earth. We simply didn't find, certainly not a lot of world-class deposits, but even when you go down to the tier 2 and tier 3. So what we've done at Copper Bank, we focused at acquiring really well-situated tier 2 projects, because we firmly believe that the major mining companies know this. They're not going to go on a global expenditure again in the middle of nowhere. They're going to focus on what has been found, and they're going to go back and try to enhance those projects. So there's my favorite little graphic that you talked about, Kerry, and it's from Ben Graham. And you have to be patient, and in real estate, you always make your money on the buy. And we bought from pessimists, and I believe it's going to be a very optimistic market. And I think we're coming in for the next 1, 2, 3 years of what could be perhaps the best copper market we've ever seen. And there's an arbitrage there, where people that maybe don't follow this day to day, and maybe these experts in energy, they certainly don't talk about it. At the world's biggest congress for people in the energy business, which is in Houston, Texas, at Dan Jurgens Sarah Week, you pay $10,000 to get a ticket, just to give you context. They talked about it the last 2 years, in not 2020 because of COVID, but 2019 and 2018 and 19, it was all about renewable energy, innovation, the Green New Deal, all these kind of things. Did you know that the word copper doesn't get a line item? I don't care, but they will. This comes home to roost. My Bloomberg interview from 4 years ago talked about the upcoming, and this you have to look at it in a decade or 15 years, but I do believe that oil and copper are decoupling, and they will decouple, and that is conclusively happening. So my interview took place in 2016. You can see that here on the graphic. This is a 20-year price chart comparing oil and copper. And oil is the dominant commodity, and when it raced higher, many commodities went higher, lower, and you can see this continuing. But there is a decoupling occurring now. And yes, there's a reflation trade going on, and everyone's talking about a commodity super cycle, but this one will not be like the others. If someone has $1 billion invested in a commodity index fund, before, 80% of that went into oil and gas. That's not going to be the case anymore. Either you have divestment, they won't allow them to invest in fossil fuels. There's many endowments that are like that. Or B, people want to invest in the future. They want to invest in the enablers of electrification. A lot more of that money in the future is going to go to mining, and mining things that produce electric metals. So I believe, because of engineering, not because of politics or anything else, or hyperbole or promotion, but because of the engineering, because we have to, as an industry, enable 0.3% copper deposits. And the only way that's going to happen, a little bit through innovation, technology, but really it's a higher copper price. You have to enable a 0.3 copper deposit at 4,000 meters in the Andes. I'm telling you, you're going to see copper well above, in my opinion, that is, above the old all-time high. Now, if you could see the absolute peak here, $4.50 copper back in 2011, if we do see that, or if we see $5 copper, do you believe oil's going to be $150 a barrel on that same day? Maybe. I would say oil is predominantly going to be driven by politics going forward. Can we have $100 oil? Absolutely. 150? Absolutely. But it won't be fundamentals that drive it there. It's going to be politics. And can it stay there for a sustained period of time? What I'm trying to articulate to you or share with you is that I believe copper is going to surpass its old all-time high, in my opinion, and stay there, because it's going to have to be able to enable all of this to come forward. So the number one rule in commodity speculation, well, it doesn't matter, my friends, until it matters. And then it starts to matter a lot. And we've seen that this year. Did you know that the world's biggest buyer of copper is China State Grid? China is now releasing its 14th five-year plan. Now, this company has 1.1 billion customers. Their spending, because of their Green New Deal, is going up starting this year by 50%. Now, they are the world's biggest consumer of copper. They buy almost 3 million tons of copper a year. Now, I haven't done an analysis on this, but if the world's biggest buyer of copper is going to spend 50% more on their business, now I'm willing to speculate that their consumption of copper is going to increase by 1 million or 1.5 million tons starting this year and every year going forward. And that'll be the same. This will be echoed with every company that is in the electricity business and the companies that feed into it, be it if you make cables, windings, transformers, across the board. They are all going to be using more copper. GM said that they're now going to go, by 2035, no longer sell the internal combustion engine. Is GM going to use more copper? If you build more wind turbines, you can go across the board. But what you see here is already manifesting itself in the markets. This is a 4-year price chart of copper superimposed by warehouse levels combining SHFE, COMEX, and LME. We are now at multi-decade lows in warehouse. And just like I've said in many, many interviews before, the fabricators, who comes in now? The speculator. They take material out of the system, not for fabrication, but for hoarding and for investment purposes. So now they have to buy over themselves, which is why copper is at $3.78 a pound. And in my view, because this speculation trade, fortified by the fabrication, high demand trade, fortified by the COVID stimulus and the Green New Deal coming this year and the years after, all of this is coming and the planets have aligned where there's no telling what can happen to the copper market going forward. So during the China super cycle, the world's largest integrated miners spent collectively on the 5 major electric metals about $600 billion. They need to spend between now and the year 2035, once again, middle of the road scenario, no crazy Green New Deals, no over COVID stimulus, but just going middle of the road where we're going. They need to spend, because we're going to require this much more metal. You can see here, the 23 million tons more copper is required in the next 15 years. They will need to spend 1.7 trillion, or 3 times more capital investment than the entire of the China super cycle. Now, they could be wrong. They could be wrong by a lot. It's still a tremendous amount of capital that's going to have to be allocated, and they cannot do this because projects are not economic at $3.50 copper prices. So that's where Copper Bank comes in. This is where our business model is going to shine. We are now going to polish what we own. We want to de-risk them. We want to come to the fold and move the ball down the field and actually contemplate some drilling programs on the portfolio. We've been working hard at the computer desk and reviewing the evidence, the science, the data. We certainly have a lot of that. We got at Copper Creek 220,000 meters of drill data and 86,000 meters of drill data at Contact Copper. And we are now putting people in the field to come up with studies, reviews, potentially update some of our historical documentation, and present to the market future drill programs. So this is the project we acquired from Red Hot Copper. You can see we paid, I paid about 5 million Canadian dollars for the project. They invested $85 million, and the market cap high was well in excess of 120 million. So we believe there's an opportunity to unlock a significant amount of value on what we believe is one of the more interesting copper porphyries, and based on historical documentation, it's actually one of the largest undeveloped copper porphyries in the world, certainly in that top 20 or 30. So, Mark, if you want to come in now, if you want to maybe explain a little bit your background, and this is the famed copper corridor in Arizona, and it happens. There are 2 major geological trends that occur for all the big copper operations in the state. And Copper Creek, which is our project located here, and you can see it here in the red box, it's exactly in the intersection of these 2 major trends, which makes it a very complicated, very large geological system. And Mark, maybe you can come in and just explain to people some of your views on the area, and then we'll dig in a little deeper into the actual project at Copper Creek.
Sure, and thank you, Gianni, and thank you everybody who's tuned in today. The Southwest U.S. copper province will always be front and center as a destination for our copper exploration companies. There's no doubt about that. It has to do with the historic production and the high knowledge base that we have of porphyry copper deposits in Arizona in particular. And Copper Creek sits right in the middle of the action. We have a major northeast trend of major deposits, starting with Silver Bell, San Manuel, which is a historic Freeport producer, is just 10 miles across the valley from Copper Creek. And then that trend extends on into the Safford and Morenci districts. And let me point out that particularly in areas to the northeast of Copper Creek, a lot of companies are starting to pay attention to that terrain. But also then in the northwest orientation is a series of prospects and mines that extend from north of Resolution, which is 75 kilometers, through the Ray operation. Between Ray and Copper Creek, there are dozens of prospects and historic mines. Then we get into and that trend in mineralization actually extends off to the southeast of Copper Creek too. It doesn't end at Copper Creek. This intersection of major deposits and mineralization is very real. And when you look at the mineralization in Copper Creek, there is a very strong northwest orientation. And if we'll go to the next slide here, Gianni. This is our land position. And from that, you can see that we have a mixture of unpatented claims on BLM ground, state land, state prospecting permits, private land that is owned, and patented ground, which Copper Bank owns outright. And in this picture here, you'll see the current open pit outline as it was proposed in 2012. But within that, you'll see the two resource outlines at 0.2% copper in blue, and the most significant one is the 0.5% copper outline in the magenta. But you'll see too that we have a quite large land position. It's 16 square miles. And we have competitor activity now, not only on our north, but to the northeast, directly to the east, and to the southeast. We have three other companies active in the area that I fully expect we will hear from in the next year regarding our land position. It's an exciting time to be working in central Arizona. But the mineralization is, if we'll go to the next slide, Gianni. The mineralization, as you see it here, the focus of the current exploration program will be in the northwest quadrant of this map, and then extending off to the southeast. And I'm looking at, I've got 30 drill holes laid out right now, of which I will need to cull that down to about 12 or 15 high priority drill sites. But you'll see that the district is peppered with breccia pipes and mineralized breccia pipes. The Copper Creek district has over 400 documented breccia pipes, of which about 30 of them have actually been drilled. And as far as finding high grade resource, identifying mineralized breccia pipes is the key to moving the district forward. And there's certainly been historical production and exploration on the breccia pipes that you see in the northwest coordinate of this map. So we're focusing in on finding more breccias, drilling some of the ones that we know about, and some of the ones that are undrilled. And the large majority of breccia pipes in the district are undrilled. And this picture off here to the right is no exaggeration. There are breccia pipes with silicified material sticking out of the ground and absolutely coated with copper oxides. And everybody knows it doesn't take a lot of copper to create a mineralized outcrop like this, but it's definitely an indicator of an awful lot of copper in the Copper Creek system.
Yep, no, absolutely, Mark. And I think people, just to give people another, so what we're talking about, this is the historical resource of which projected to surface, if you will. Right. Now, this entire area here, if I give you a cross section, that would be here. This is the surface area. Follow my cursor. So this area is unknown. All this area, all these areas here are presumed to be waste. This is our focus. So if we look at all of this terrain with all of these breccias, we feel that right now it's considered waste. It would be a pretty sour outcome to have that lack of success on the drill bit if we were to go and actually focus on these breccias in this area here near surface and try to find more resource. Grade wise, if I look at the actual table, this is a historical mineral resource estimate. Copper Bank does not consider this to be current, but it was done to 43101 standards. It was done by a very good group out of Tucson, Arizona, Joe Keane and that group, they're independent mining consultants. And you can see here the grade. So even if using a higher cutoff grade, in the measured and indicated, look at that, 0.54% copper. I already showed you a table in those other areas, high in the Andes, areas that require more security. You know, the global average is less than 0.4. Here's a project in Arizona, in the copper corridor, with readily available workforce infrastructure and everything that required for a project, a copper mine, a development project, with pretty good grade. And if you look at the overall tonnages on those historical resources, that's already in measured, indicated, and inferred at using a 0.2 copper equivalent cutoff. That's already 1 billion tons. That is a world-class number. So what we want to do is look at a more near-surface resource, and there's a lot of drilling required. We'll start with things that we can bite off, and then where will that end up with an updated mineral resource estimate? But we also have that area to the north where there could be a second project or a greenfields exploration project that we could work forward, which is about 6 kilometers northwest of where this historical resource is. I don't know if you got any comments on this resource here, Mark, but you'll be updating this for us, correct?
I will be updating this eventually. If you want to go back to that cross-section slide for a minute, I'd like to point out that right in the middle of the slide, you'll see grade models that come all the way up to the surface, and quite a number of grade shells there that are cut off due to lack of density in the drilling. And if you look at that area between 406,000 to the east and 402,000 to the east there, that zone in there is where I'm focusing our existing proposed drilling program, and I'm going to try to fill in some of that mineralized resource that comes to it definitely comes up to the surface in a number of areas, and then also look at some of the deeper potential, such as that 840 feet of 1.4%. That very significant intercept there, and no drilling above that zone. So we've got our work cut out in the Copper Creek district.
We do, Mark. I also want to focus on byproduct credits. So what you're looking at is predominantly it's a copper deposit with a little bit of moly and a little bit of silver. There are other byproducts that have been assayed that are relevant, that are present. The question is, at what price do you want to attribute to them, and do you include them into a resource on different sensitivities in different scenarios? Well, they do exist here, and Arizona is known as to have a lot of rhenium, for example, with the moly, and there are some other things that we're looking at. But can this assist in the economics on a copper equivalent number? So we're going to look at that as well, and we'll probably have different scenarios going forward. But certainly these are positive surprises that can add to the project. And if you look at the numbers here, it's hard to find a project that has, you know, this much tonnage and this kind of size for a project where it's situated. And to recap on the numbers, so far about $85 million has been spent here, 220,000 meters of diamond core drill data, various historical economic studies, metallurgy has been done here, already a few different studies, geotechnical work has been completed here, and not to be forgotten, an enormous amount of land assembly. We're talking about 10,000 acres of contiguous property, a good portion of which is real property acquired by previous operators. So to have that in Arizona, a 16 square mile component, and it's a low holding cost. Our cost for the BLM claims and the Arizona State Mining claims is about $80,000, and for the private property portion, about $50,000 a year in perpetuity to hold this. So it's about $125,000 for all the holding costs associated with Copper Creek. Our office and where our core and everything else is stored, we actually own outright 3 acres of land in San Manuel. We have no mortgage and just a little bit of property tax to pay there. So that's important. This is a low holding cost project, and there's no joint venture or earning in or what have you. We own it on a 100% basis. The second project that Copper acquired is Contact Copper. And do you have any other finalizing statements on Copper Creek? Or we can get to the Q&A, I think, Bill, is probably more important at this point. And if you just let me just go over the details of Contact, we can then go to the Q&A, because some people might have some questions. But we acquired that from Anexco International. You can see here the chart of that company, and we bought that in the first bear market. And it wasn't an out-and-out sale, nor was Copper Creek. People should know that. This was a partnership. It was done for share equity. They had to buy into the business model. We did not pay cash, and they were, in fact, the largest shareholders of Copper Bank. That is the shareholders of the old company, Anexco International, which had, on a 100% basis, the Contact Copper project, which is about 6,000 acres located in Elko County, Nevada, and it's got a pre-feasibility study that was published in 2013, and an area to the left here you can see called Copper Ridge that's actually basically never been drill tested. There may have been a couple of exploratory holes in certain areas, but certainly the areas we're focusing on have never been drill tested. And the reason we like this area is because of the incredible results that were encountered there in 2012. Outcropping copper, 1 to 12% outcropping at surface, and it's only about a mile away from where the 2013 pre-feasibility study was completed. So if we're successful here with the drill bit, and these are incredible numbers, folks. You have to understand, where do you find these kind of grades? So this is all near surface. On a good portion of it is private property, located in Elko County. And if we're successful here, future resources that, if they're delineated, can be very easily attributed to that 2013 pre-feasibility study. So this is something of a lot of focus to the company, and this is not expensive to drill here. These are 100-meter holes. We need to answer some unanswered questions, but there could be a significant amount of value added to this copper oxide project. And if you look at the net present value of the projects combined, we bought them when copper was in the $2, $2.50 a pound copper price. They're not economic, but nor is, very few projects in the world are economic at sub $3 a pound copper. But when you look at the combined net present value of the portfolio, when you see copper above $3 or $3.25, every 25-cent move that we have in the copper price, we're able to capture, based on historical economic studies, about $300 million of net present value. So now that we have copper at $3.75, it's a line item. If we get copper in that $3.75 to $4 a pound sort of environment, there is a significant amount of torque. Our market cap is $28 million US. So there's a bit of a disconnect there. So people are, in my view, we're going to start adding projects like this to comparables, and we are undervalued in every metric, whether you want to call it on a pounds in the ground basis, net present value to whatever copper sensitivity you wish, the amount of money spent on the portfolio, there's G&A to reserves that we have, or historical reserves. There are a lot of areas that I think people can find value, and certainly we're closer to the bottom than the top, in my opinion. Do you have anything to add on this slide, Mark? Maybe at Contact Copper, a project you were at when you were a much younger person?
Yeah, I visited Contact one time very early in my career, and I was pretty impressed with the area. I'm looking forward to getting back there and doing a little more detailed work on the project.
Very good. So let's get to the Q&A, and I'll just end it off with our royalty company. We're going to be moving Contact and Copper Creek forward. But the question is, if we're successful there, what happens? How do you monetize that? We've always talked about providing a return to our shareholders outside of share price appreciation. So as these projects move forward, and if you could use in the theater of your mind, there was some kind of commerce done at Contact or Copper Creek, then comes the royalty opportunity. Because now, because of this private property component and the ability for Copper Bank to attribute a 1 or 2% royalty to either of the projects, we now have comparables with a company like Nova Royalty, and what they're paying for 1% or 2%. You know, the royalty company today has a value, but if we move the ball down the field and we're able to attract interest from whatever more senior party to either project, those royalties, if people can see that they're quicker to, on a discounted cash flow model, it's something you can actually see down a multi-year development pathway. There's a lot more value there. That's why we're branding it now. It is a business, and we could at any time create, let's say, a 2% royalty on both projects, and we can in fact spin that out and create our own royalty company as a share dividend for our shareholders. We can't eat our shares. We're very motivated to do this. And I think the market would have a hunger and an appetite for a little Pico Junior copper royalty company with the ability to grow. And our team is very motivated to realize that. So at that point, Bill, maybe we can go into the Q&A. I got a couple slides I can go back and forth to if there's a question here on the projects, but certainly it's all about share price. Can we unlock value to close the gap between the historical market cap high and our current market cap?
Okay, thank you, Gianni. We had numerous questions come in, and we'll get to all of them. Thank you also, Mark. John Fennick of Fennick Consulting will first lead with some questions, and then I'll read to Gianni and Mark all the questions that were submitted. So go ahead, John. John, you have to unmute yourself. It's the microphone button. You have to click it till where it's green. Now try. I think you're on.
Hey, can you hear me now?
We can
Should
hear
be
you.
good now.
Sorry, guys, rookie mistake. All right, let's get to it. So Gianni, you and I met about a year and a half ago. I was really impressed with your presentation and your style and just your knowledge of the copper space. And as Bill knows, I went on his show in May of 2020 and was a copper bull very early in this run here. So technically, you and I talked, Gianni, about it breaking that 320 level and now 350, and it really held 350 nicely recently. And now we're breaking out at this 378 print today. So what happens to copper stocks like yours if we break through $4? Don't you think it's going to be just mass hysteria for some of these names?
Well, we can use, Rick Rule always says, past his prologue. And, it's funny how sometimes you get to that critical level and all of a sudden things revalue. We already know on a net present value, just look at Copper Bank. I'm going to selfishly talk about it. It's been the theme today. I showed you on the historical economic studies. Every 25 cents that the copper price goes higher, it gives more confidence, more plausibility, the fact that copper is going to stay, let's say, about 325. But we capture $300 million in net present value based on those historical studies. Now, how many 25-cent gaps higher in the copper price do you need to go? We've already had 75 cents from $3. That's $1 billion in market cap appreciation, in net present value appreciation. So what can happen? If you look at Inmet Mining in 2001, was trading at $2 a share. This is a producer back in those days. It went to $110 a share at the peak of the China super cycle. Now, how many people sold along the way? Don Cox said it at PDAC. He was telling people in 2002, 2003, when copper prices were going up the first time. He says, you don't understand. If you don't understand the consumer of the future, the Chinese economy, you don't realize where you're going. And he says people were cashing in their stock options as companies went like that. Now, I'm not saying people in Inmet, but as an example, they went from $2 to $6 or $7, cashed in their stock options, went to 110. How much money did they leave on the table? And he has a saying for on Cox. Those that know it the best, love it the least, because they've been disappointed the most. People now, it's been so long and such a hard bear market, they're still not convinced. Many people watching this show, well, that could go down. You know, we'll see what happens. But we've already seen the mid caps. Capstone Mining has went from 30 cents to $3 a share right now in 9 months. So if you don't see the plausibility, remember this has already occurred in Copper Bank. Our portfolio was trading the historical market cap high well in excess of $3 a share, and they were raising big money at the time. What more confidence do people need? I just raised all the capital we need to do all the initiatives I've talked about, until we get to a point where we're going to drill. My share price is going to go up or it's going to go down. If it goes down, well, you know that we're buyers. And now that we've closed our financing, we would be significant buyers of our own stock, as we should be. If I'm the one trying to move it forward, I should be the one that supports it the most.
So let's talk about that, and then we'll get to the other questions. One of the things my clients and I look for is insider buying. So, we were talking earlier about this website. If everyone that's listening may have a pen handy, it's CEO.ca. And that is just type in the symbol CPK, Charlie, Paul, Karen in the search field. And on the left-hand side, you're going to see something that says SETI Insider Filings. And basically there you can see all of Gianni's insider buys on the open market, which is something as a portfolio manager that I love to see. So Gianni, thanks for your support of the stock, even in bad times, because I noticed a lot of your purchases were when copper was out of favor.
Correct. It's CBK in Canada, Charlie Bravo Kilo. But anyways,
Sorry.
It's people say, why are you buying your own stock? Why are you buying your own stock? And I say, look, this pays dividends years later. I'm not here to focus on one or two insider buys or all these people do check swaps and all these funny things. This is real money, hard dollars. 7 pages of insider buying, month after month, year after year. You pick the year, 15, 16, 17, 18, 19. We support all of our financings, but even after that's done, we're in there supporting the stock. I'm not doing it because I'm a nice guy, John. I'm doing it because I think the stock is cheap. And when it falls out of favor, I have a long-term vision, long-term strategy, and if we can execute, and the copper theme I think is real, and my understanding of executives in the copper mining space, and I will suggest to people, and this is something that a claim that I'm very proud of. I'm not being a braggart, but we earned it. My group has in excess of 300 years of collective experience, and I will tell people that we are 1 degree of separation from anyone who is anyone in the copper space. We earned that. I delivered the keynote at the copper dinner in Santiago, Chile, when the copper world gets together every April 2017, and they invited me to address the world of copper. My opening line, and people can see this go to Copper Bank's website, go to the Energy Zone. Many people have probably already seen it, but my opening line was, you are all in the energy business because you provide things to enable electrification. And so we understand copper, and we're very very committed to the business, and it's a long-term vision, but sometimes these things happen very quickly. It's the 3-year overnight success story. Our stock has doubled in a couple weeks 6 or 7 times over the past 5 years. We just did it now. From December to January, the stock doubled. I believe because of the consolidation, because now copper, for the first time in 8 years, people viewing, this is the first time in 8 years copper has been this high, and our share price is lower than when it was in 2017. So now you could also look at a market cap basis. We had a little bit less stock outstanding, but still, net with this consolidation we've seen, I think we're poised for a real breakout for a lot of the high quality copper juniors.
Yep. I would agree with you. I mean, at Fennec Consulting, we own, in full disclosure, a position in Copper Bank in both our mining portfolio and our energy portfolio because of the things you're talking about. We think you're completely undervalued here with a market cap of 28 million US. Let's wrap it up with one last question, because I know you're in the middle of a financing now that's going to close soon. So that million or so Canadian that you're raising, is that going to cash you up for all of this year and into next year?
Very good question. We throw pennies like manhole covers. This has always been our capital. We don't have, and just look at our financial statements. Are we spending wine, flying, doing all these goofy things? We don't do that because I have to raise the capital. And when the times were tough, we had to pony up our checkbooks, or we'd have to go to some of the key supporters and raise that capital. We're closing, or I should say, we're fully subscribed, and we will close early next week, the $1 million. Can I raise more? I could raise spades more than that. But why would I do that? I don't need that money today. And I know it'll be readily available within the group when we provide the evidence of what we want to do next. So this $1 million will cover all of our G&A for 2 full years. And I can say this with conviction because my holding costs in Arizona are $120,000 a year. My holding costs in Nevada are about $42,000 a year. I pay my auditor $30,000 a year, and we have very low expenses overall in the company. So that covers all of our property payments. We also have a research report coming out on the company, which I believe is going to be very beneficial. And we wanted to have a balance sheet that reflected the fact we must need to raise capital until 2023. And we also are spending a little bit of money marketing. We haven't done a lot of that. I do a lot of interviews. I'm on various shows, but I want to go in various audiences around the world, including in Germany and other. I speak fluent German. I speak fluent Italian. I want to speak to generalist investors fortified with this research document to talk about what we're going to do. And so sometimes that does require a little bit of capital. So there's going to be a budget you're going to see in the next quarter. A bit of G&A is going to increase because we do want to talk about that. But we think that it's going to deliver a lot of value for the shareholders, and it's going to give us a broader shareholder audience. And we're able to do all of the field studies with Mark Fowl and the team working. He was on the site twice already. He's going to be going back a third time. We're going to be paying for these studies and reviews and reinterpretation of some of the data we already have. This has already been run. It's just maybe like some of our geophysics, running it through a more sophisticated computer to give us more sort of guidance on where we could help us drill. And all of this is going to be paid for with the $1 million that we're raising today. So unless we get rewarded for the work we do, there should be no dilution until late in 2022, early 2023.
Fantastic. Thanks a lot, Gianni. And Bill, I'll turn it back over to you to get some questions from our viewers.
Thank you, John. And Gianni, we have about 12 questions in the queue, just so you can stagger your answers in terms of time. First question comes from Mike. Beyond copper price increase, what are the top 3 drivers of market cap?
Of our market cap, I believe there's going to be some catch up. I think people have made money in the majors. They always do this, and then they go down the food chain, and a lot of money has been made in markets in the sector, and that there'll be some rotation. So I believe that's a positive trade doing that we have. It's also showing the evidence of where we're going to make our next moves. You always have to ask the question, well, this project was around before, people knew about it, had a highish market cap, but it fell down. There's a reason for that. It's not a perfect project. It does require higher copper prices, but we also need to execute, and we need to answer some of these unanswered questions. And the good news for us is the first batch of questions, it's thousands of dollars, not millions of dollars, to answer them. So it's really about having the team do the work, and then we present the evidence to both investors and, more importantly, to major mining companies. There's an opportunity there, and there's not a lot of copper creeks in the world. I know this. We know where the development projects are. I can show you the list. So this is a project that you can drum up the imagination of these technical teams in major companies pretty quickly, but you got to fortify it with evidence and a rationale. And then we also have, I think, when the fact that we're going to be marketing and we have this research coming out. It's hard for a little company to have research, but certainly that helps. And the fact that we're located in the United States, we're cross-listed on good exchanges. I think we have all of these trade wins because it's well established what we do, I think, and many people have been sitting on the fence. A lot of guys were sitting on the fence when the stock was 22 cents. Now look at it. But look at Capstone. Capstone was 30 cents, then 60, then 80, $1, $1.50. It's $3.20 a share. So people eventually, greed happens quickly. Fear, takes a long time to get rid of fear, but greed just happens overnight. It's like Robert Friedland says, it's just like a school of fish. Just happens like that. Always has been, always will be. Since Moses left Egypt, it's always been that way, and I don't see it changing this time.
Next question has to do with copper demand. Does nanotech in key consumption sectors pose a threat to long-term copper demand?
That's an interesting one. No, I don't believe so, because what I'm talking about copper consumption is big cables, power, and you cannot use other things. People tell me that, oh, we use fiber optics in cars now. We don't use, electric cables. Well, except that the fiber optic switches an electric motor. It's the motor that consumes the copper, or the integration between batteries and cables. So will that have some impact with switching? And sure, and if you aggregate that over a billion products, eventually becomes a line item, I suppose. But what I'm talking about, the demand of copper going from 26 million tons to 40 is because of big power systems where the entire electrical network goes from 20% to 50. How much copper was installed to give us the copper base today, which is predominantly 75% of it has always went into the generation, transfer, and utilization of electrical energy? Well, that goes up by 1.5 times and then some, because now it's not going to be a new thermal power plant, which requires 1 ton of copper per megawatt. It's an offshore wind park, which requires 10 tons of copper for 1 megawatt. And they are building these things, not because they're science projects anymore. It's because they're commercially viable, augmented by other things. So that's not going to change the calculus for my investment right now in copper. Personally, that's how I see it.
Gianni, you talked about how oil is driven by politics, the oil price. So Frank asks, do you speculate that perhaps countries such as Chile, Peru, etc., could form an OPEC-like organization in response to higher copper prices in the future? Would geopolitics start getting priced more into copper? Thank you.
I just got a note that my computer is going to run out of battery juice. Let me just quickly plug it in, Bill. Can you give me 2 seconds?
Yes, we can.
Sorry.
Mark, you're shaking your head. Do you have any comment you want to add to that? You got to turn on your mic.
That's a perennial question when the price of copper starts to head up. Is what would happen if there was a copper cartel? And certainly Chile and Peru would be at the top of that. I personally think it's very real that it could happen. Whether it does or not, cartels always end up failing one way or another, and it would only augment production within the United States if that was to happen.
Okay. Gianni can add his 2 cents in a second, but I want to throw out to you, Mark. This is a question also from Frank. Is the future of copper mining shying away from large billion-dollar CapEx mines to smaller mines?
Well, the
CapEx is shying away from huge open pit mines and focusing more on underground mines, and certainly projects like Copper Creek that can combine both an open pit and an underground mine are going to be of primary importance in the future. But I don't see the CapEx necessarily going down. It's going to be expensive, and it's going to require higher prices in copper to maintain those levels of production.
Let me add to that, Bill, and this is very important. If I actually had a picture of that. Let me just put it up for everyone so you can see it. It's very important because this really shows it. Where is it? This one here. This one here. Can you guys see that?
Yes.
Yes.
So the CapEx of these projects, the reason you have a 2, 3, 4, you can see it here, 5 billion, 6 billion, 7 billion, $8 billion, the second project there, Kaz Minerals in Russia. you have to pay for everything. When you're at 4,000 meters with no water and no power, and you have to fly the team in, talking to a couple thousand people or more to build a project, and maybe, I don't know, 500 to 1,000 people working there for 30 or 40 years, you have to pay for all this, which is the decision they have to make as a major mining company. Are we going to take a project in Arizona with some pre-strip or strip ratio and everything else is there, and the big capex doesn't occur until you get to the mill? Or are we going to do it somewhere else where you have to spend $2 or $3 billion? Because I can assure you, when you look at some of these bigger capex projects here, half of that is before you even get to the mill. They're paying for all the associated infrastructure to get there, and then getting the concentrate out and everything else. I cannot emphasize enough the importance of a project like Copper Creek. And that's a decision the major mining companies are going to make, because guess what? Their business is going to be very good, and their board of directors are going to pressure them to replace reserves, because fabricators around the world, their business is going to be very good. If you're making motors, windings, cables, they will pay more for copper because they're able to pass that on to the consumer. They will absorb it. They certainly did in 2002 to 2007, when copper went from 80 cents to $4 a pound, and it was absorbed, and we've paid an average of $3.50 a pound for copper ever since. So they will have to make this decision, but the high capex will not go away for these projects. And it goes back to what I was talking about. It's high in the Andes, areas of much higher political risk, or they're going to have to go to a project like Copper Creek that is very well situated, has higher than the average grade. We just have to find more resource near surface. And it's very plausible that our team can go and execute some drill programs, and that's what we're working on.
Ray asked, are you fully permitted? If not, how long can the permitting process take?
Well, we're not a production company, so we're talking about a production permit. That's not us. We're a development company. So we're looking to enhance our resource and then potentially look at doing a follow-on economic study. There is a good portion of our project that's situated on private property. Now, adjacent to Arizona State Mining Claims or BLM claims. It is readily available for permitting to do drilling in that part of Arizona. And Mark, maybe you can answer that as well. You have a lot of experience, and you could talk about the difference here between other parts around the world.
Well, dealing with the Arizona State exploration permits and dealing with the BLM in Arizona is a fairly straightforward process. And I've worked with both groups on other projects in Arizona. Plus the fact that a big part of our mineralization is already on patented, as well as ranch land that was purchased. We're not dealing with the Forest Service here. We're not looking at an extensive permitting process for drilling or exploration. There's the usual hoops to jump through as far as getting into production, but I cannot see it being a knockout, drag down fight like it has been on some other projects. And I meant to mention earlier that there's a tremendous environmental and engineering base on the Copper Creek project from past studies where they looked at trying to do small underground mining operations there, as well as an open pit. And the amount of engineering that's available is a fantastic base to work from going forward. We've got water studies, geotechnical studies, piles and piles of manuals and books in the office in San Manuel detailing past studies. That's all available to begin working from. It's not like we're starting from a zero baseline moving forward as far as engineering and permitting goes. It's there's been a lot of water studies and everything else done on the Copper Creek project.
Okay, we have some questions about the royalty company, potential spin out. What conditions would the company need to consider spinning out the royalties portfolio? Could you be more specific about the timeline?
Yeah, this is a forward-looking statement. So we've got a couple of press releases talking about the opportunity, and I'm going to be, we just execute a lawyer to create the royalty, file it with the county or file it with the state, and that's the asset. It could become a public company. In our view, that's something that doesn't require a lot of capital. So maybe in the next few months, if Copperbank does a little bit of a larger raise because we're getting ready to drill and we've seen share price appreciation for the things I talked about, because I will emphasize, if we're not rewarded for the work we're doing, you got to think about these things. I believe we will be, but you know that has to be delivered. If we were to have that company with a couple of small royalties, maybe we could attach another couple royalties that exist out in the world to this company. Nothing prevents us from simply spinning it out. And it would have a very simple structure, very low cost. It doesn't require any kind of fancy team and what have you. And it would then have a mark-to-market value, being a stock listed company, small one, of course, we acknowledge that. And the more that we move the projects down the development arc, the more that they will be worth, in our opinion. But in the beginning, if it had a low value, I'm a buyer. I would buy a lot of that company, because if people don't see a lot of long-term value and they're making a short-term trade, I would be a buyer of that. So if it was stock listed, it gives everyone vision, mark to market. Now, if it had the higher the valuation it has, Copperbank would remain, or should be, the single largest shareholder of that company if it was ever spun out. And it allows us as a company to point at it and say, that's another asset that we have.
What's the ultimate growth trajectory for your royalty business, is a follow-up question.
Well, the more that we advance the project, the more value would be attributed to the royalty. But I think we can also, if it's stock listed, now we have currency. We can issue shares to obtain more royalties, which I think is very important. And if it's accretive, we would be very active there. So this is a touchy issue, because these are all hypothetical. I mean, there's one thing we could do. We could also attach our wagon to someone else that's already doing it, if the value is there. But we need to be able to control that, because sometimes when you move a project into development, you need to be able to deliver a royalty, or at least a part of it. So that's something that we're very careful right now, I think, in this transitionary stage as we go into actually enhancing the projects and moving them forward in development.
Do your assets have the potential to have a heightened ESG production profile versus peers? Please explain details if so.
Well, where the projects are situated, they're both in areas that do not have any kind of residential activity. By Copper Creek, we have 3 towns that are near the project, but they're on a highway that runs north-south in the copper corridor. Most people are working, in fact, in the copper industry. Talking about Oracle, Mammoth, and San Manuel. So, but the project itself is there's no Forestry Service land. It's exactly that. They're Arizona state mining claims with our private property that are mining claims. And the project in Nevada is the same. It's in an area that had historical copper mining. It's the state of Nevada put a placard there. They were mining copper from 1909 to about 1940, and nobody lives there. It's arid. They're exactly that. They're BLM mining claims, and there's no township nearby. We'd have Twin Falls to the north and Wells, Idaho to the south. So I think they would be pretty not a very sensitive project. Of course, we would do it in the most responsible way forward, whatever development we're going to do.
What are your thoughts on the opportunity of ISR, in situ recovery, copper mining, if positive, and Copperbank exposure?
I love ISR. I think it's interesting. We do not have the geology. You have to have soluble copper and porosity. So that's not what we're not going to focus on that. That doesn't work for our type of geology on either project. So, but Florence Copper and what they're doing with Excelsior, let's follow. It's interesting for the industry, but a lot of unique things have to occur together to give you that, and it simply does not happen that often in copper, unfortunately.
Since Anexco did have interest in Copperbank, what about additional value objects, uranium and trace minerals? Will they assist in bringing that to market if viable?
Not at Contact Copper at all. There's not even nuisance gold there. It's really a unique and special deposit. The copper is all soluble, high recoveries. lowish acid consumption so far. We need to do more metallurgical work there, but the project looks very interesting for those attributes. And at Copper Creek, actually, we have some opportunity with some other byproducts that we're looking at, and that will be looked upon in a resource update. And what's the commercial viability of those other byproducts? But certainly they add value, and if they can add a line item to what the value of a ton of ore is, I'd say it's not a negative.
While there is little to incentivize for copper projects at $3.50, what is the likelihood of other commodities taking off and increased production of those commodities in response drives increased byproduct production of copper?
Yeah,
So
I don't know about
I understand the question to mean.
porphyries.
I'm sorry, Gianni?
We're talking about gold porphyry, the copper gold porphyries. I think in most cases where the copper is a line item or it's important, it's a copper gold byproduct porphyry, not the other way around, because the copper that comes out of a gold heavy porphyry, they're not as common, but yeah, I don't know if you're going to get byproduct copper out of too many things, or maybe some IOCG things, Mark, maybe, or copper nickel.
Mark, your microphone is off.
Most copper projects are primary copper with some kind of byproduct, whether it be gold, silver, uranium. There can be lots of byproducts, even magnetite in some operations. But to have byproduct copper, about the only place you would get that is maybe out of a lead zinc mine. But it typically stays within the base metal realm.
Gianni, do you have any confidentiality agreements signed, or are there majors interested in talking to you that you can share?
Every single junior listed on the Toronto Stock Exchange or the Canadian Stock Exchange has a folder of them. Very, very common. Of course we do, like everyone else would, but that shouldn't surprise people. What should surprise people is who is on our northern boundary, who is on our eastern boundary, who is on our southern boundary. That's interesting. And are they working there? Are they doing something? That should be interesting. And if they have any fortitude or the ability to find these things out, that's what they should be looking at.
Okay, and the last question, what's most likely to go wrong in 2021 for Copper Bank, and how would you handle it?
It's a good question. We always have contingencies, so we always say what we do what we say. And if I use an old carpenter's mentality, measure 7 times, cut once. We want to make sure that we can deliver, which is why I do things in bite-sized format. I'm not going to make big promises that we're going to do X, Y, or Z. So we raised our capital just like I said I would when the stock was 32 cents. I said I'm going to do a 35-cent financing with no warrant. Who does this in the junior game? Every single financing I've ever done has been done like that. We do not have an overhang of warrants on this stock. You know, this is very important. Now with that capital, that precious capital, which is 3 million shares of dilution, that's going to pay for my G&A for 2 full years, and it's going to give me the ability to complete all of Mark's studies and the work that he's doing, so we can go and flash the evidence. This is what we want to do because we want to drill here, here, and here to hopefully have these results. And we think that's going to be a pretty exciting proposal for people that like to finance that type of drilling. Meanwhile, I can still deliver the royalty company because the royalty company does not require a lot of cash. We own these assets.
Right.
Spin that out. And then maybe in the beginning, Copper Bank is the majority shareholder and we have a dividend for shareholders, and then we'll see how it trades. If people think it has no value, I'll buy the stock. Or maybe the market says, you know, this is interesting. This can really grow. It has a lot of value. And then we have share capital to go and buy more assets. So what can go wrong? I can't control the copper price. If we were to have some real calamitous plague type thing evolve out of this COVID, where all of a sudden tens of millions of people start dying and we shut down the global economy and people stop consuming, copper prices are probably going to go lower because they're not going to be able to do this Green New Deal. You know, I can't control that. But you know what? Our house is in order. We can pay for what we need to pay for the next 2 years, and we will still execute. We can still do the hard work with the field work that the team is doing and the studies that we're reviewing and the evidence that we want to provide. And then we will make our next steps. So what can I say? That I don't lose a lot of sleep at night about the copper price, and I think because we only deliver what we think we can deliver, and we see. JP Morgan, I'll leave it like this. If this is the last question, JP Morgan always said, go as far as you can go. When you get there, you'll see farther. And that's what we're doing. So
Excellent. Thank you, Gianni. Carrie, I'm going to hand it back over to you now.
Thank you, Bill, and thank you, all of you. You did an amazing job here. Apologies for the technical difficulties, but somebody just told me that Mercury is in retrograde, so that could be having some effect upon it. Hey, as you all can see from the presentation today, during which copper hit 378 per pound, you see there's not a lot of world-class copper projects out there waiting to be developed, and even fewer of them are in first world jurisdiction. And you look at Copper Bank, all of theirs are in the good old US of A. So I should have disclosed earlier, I apologize, I'm a shareholder of the company. The upside potential, I think, is enormous. I think, as Gianni said, we're heading for this electrified world. I just hope that there's not a lot of wires loose, because there could be a lot of electrocutions that way, accidental, of course, but we're heading there. And when it comes to copper, I just don't see any opportunities out there for myself like Copper Bank. And knowing that Gianni is running this show and his forward thinking, and the fact he's been preparing for this for nearly a decade, that really increases my confidence level. And then to have a geologist of the caliber of Mark working on this project, to me, it all brings it together, and it makes me very excited. And I'm thinking before I move out of my rental, I will strip out all the copper wires and go recycle them and melt them down. Anyway, all of you, thanks for your patience with the technical bugs. Really do appreciate it. Appreciate your coming here. You can go over to the website, which is copperbankcorp.com. If you're looking at the stock, the tickers, there's 3 of them: OTCQX, CPPK like King, F like Frank. On the CSE, that's the Canadian Stock Exchange, CBK. And on the Frankfurt Exchange, the number 9, C like Charlie, M like Mary, 9CM. We'll leave it at that. If you've got any questions, please send them to me, kl@kerrylutz.com, or go to the Copper Bank website. Just direct them to Gianni. One of the things I know is if you have a question, it will get answered by Gianni at some point. Obviously, he's busy, but we will get to them as quickly as possible. Send them to me. I'll send them on to him, kl@kerrylutz.com. Again, all of you, thank you. All of you out there who attended, really do appreciate your patience and hope you got something out of this. Just send us your comments. We'd love to know. And on that note, we will end this webcast, and it's been a pleasure.
thank you, everyone.
Thank you, Kerry. John, Bill, Gianni.
Thank you.
Thanks.